SOFI Technologies just reported earnings on Tuesday morning, July 29th, and everything in that earnings was amazing. It knocked it out the park for all the things, right? And for once in my life, I was actually right about my predictions, but they even did better than what I predicted. So the three things I noted in my last video were members, products for members as well, and also increasing their credit box. And all those three things were answered and then some. They had previously said that they would focus, if the economy was doing well, they would focus on growing and they might have lower earnings. They even knocked the earnings out the park. Even the mega bulls on YouTube and all the mega bull like analysts, even they were like surprised at that. But like I want to focus on members, products for members, and credit box. Those were the four things I guess I noted. And okay, we just look at this transcript. We added a record 850,000 new members in Q2, increasing our total members by 34% year over year, and also recorded 1.3 million new products. And if you look in the earnings slide, you see that products per member also increased, which means that you do see this flywheel starting to spin. When they rolled out SOFI Plus membership, the $10 per month membership subscription, that would, in my opinion, I think that is one of the things that contributed to this increased products per member score. And this is amazing, right? So people, you have to, okay, like for people that haven't been following SOFI, a while back when Anthony Noto predicted 1 million new members per year or per quarter, 1 million new members per quarter, people almost laughed at that idea, saying it was unreasonable. Like it was like it was just such a like a moonshot that it would probably not happen for a long time. And we're at 850 new members in Q2. Like, what? That's amazing, dude. You don't okay, enough meme. Yeah, I'm happy to be right about this. But what's even crazier is they experienced this mega growth in members and products, and they still beat EPS crazily, right? Let me see where it is. So if you see us above the 30% incremental EBITDA margin in a quarter, it's because we outperformed relative to what we thought, and we couldn't spend the money fast enough. That's how much money they were raking in. Dude, that's amazing, right? Now, I want to talk about what I think is one of the things that contributed to the most to the increased, not members, but the increased EPS or EBITDA. It's them increasing their credit box. I talked about this in a previous video. This would be the black swan. I said that the increase in the credit box would be the black swan because every year they were rejecting $100 billion of loan applications. $100 billion of loan applications. If they were to expand their credit box and they could access some of that money, that would be such a big move in like such a big signal in how much SOFI can grow. And they mentioned credit box. How many times did they mention credit box? Credit box. They mentioned credit box 6 times in their in their earnings report. That's how important it is, right? So this, as I said before, is one of the black swans that we should be paying attention to, which I guess since I kind of noticed it should be a gray swan. But the terminology aside, right? You also let's look over here. Okay, so they increased their credit box. Do they have much more room to grow, right? That's what matters, growth, right? Now, here it is. They mentioned credit box again, but I want to note, I think this is also credit box. No, this is how much, they said it like 6 times. I mean, that's how crazy it is. Okay, right here. So we did $2.4 billion of origination on behalf of others. That's up from the $1.6 billion last quarter. Right? So keep that in mind. So that means they increased by a total of $800 million of loan origination because basically one of the factors as to why there's that increase is because they expanded outside of their credit box, right? So if they said that they have $100 billion that they reject every year, and then annualized, they increase by 0.8, and assuming that all 0.8 billion was just from that increase in credit box, which I'm assuming it obviously isn't, right? Like they're gonna have some that are still within their credit box. But just even if you were to assume, right, lowest possible scenario, if you were to assume that all 0.8 billion dollars of loan originations for this quarter were because they increased the credit box, that's only annualized $3.2 billion, right? $3.2 billion. That's 1/30th of the $100 billion they reject a year. So that means that this increase in credit box, this expansion outside of their credit box, could see a 30x growth. Assuming like, obviously they're not going to take the entire TAM, right? But like, it has that much room to grow. And it can only go, like, it has so much potential. 3.2, because, okay, so again, 3.2 billion, just make sure you understand, right? I'm saying that the 0.8 billion or the $800 million increase in loan originations for the LPV, if I'm going to assume that all of that 0.8 billion came from them expanding outside their credit box, that means that this quarter, if they were to annualize this quarter, right, so that's 0.8 times 4, which is 3.2 billion, right? That means they have another 30x to expand in order to reach this $100 billion that they're rejecting a year. That's so much growth potential. So now let's talk about the elephant in the room, right? SoFi, after announcing record-beating earnings, it jumped to $25 and I think 11 cents, and then subsequently dropped down to $20 and 80 some cents, or I think even lower, I think like 30 or something like that, because they announced a $1.5 billion offering of around 72 million shares of SoFi stock at around an average price of $20.85 a share, right? $20.85 a share. So people were going ballistic about how this is like, it's a momentum killer. It's horrible. Like, why would you announce it at this point, right? But I want to bring attention to this line right here, right? So if you see us above the 30% incremental EBITDA margin in a quarter, it's because we outperformed relative to what we thought and we couldn't spend the money fast enough. So on surface level, this is bullish, right? It's like you made so much money that you didn't know where to spend it. But if you read it a layer lower, it could be taken as something bearish, right? You're investing in SoFi for the growth potential. But if they don't have anywhere to grow, right? They're just going to continue doing what they're doing. And they're saying that and if they said that they don't have any money to spend it because they don't see any growth opportunities or any direction to grow, this could be taken as something that could be bearish, right? But after saying we made too much money, we couldn't do anything about it, and then they announced the $1.5 billion deal with Goldman Sachs for $1.5 billion, right? That means they want this money for something, and that's usually to grow, right? So that renders that bare reasoning completely like useless, completely obsolete, because they're going to want this money to grow somehow, right? And that's what this is. Now, I also want to bring attention to the share price. $20.85 a share. Reminded, this is a direct offering. It's not a public offering. It's a direct offer. It says public offering, but it wasn't like at the market. That's what I meant. It's not at the market. It was basically like signed and done the moment they announced it. Right? This was not at the market offering. This was a public offering for a specific. They basically just they underwrote this, right? So it was just sold to Goldman Sachs and Citigroup and Mizuho, right? At $20.85 a share. Let's look at the share price. Literally the day before, it was at the low point of $20 and I think 60 some cents a share. Okay, 85 cents a share. Is that true? It looks like it. The low point of like 2078. Would anyone buy if a company did not expect SoFi to grow, right? If you think that $25 is a cap or whatever is a cap, would you do a direct block offering? Would you pay for stock when it barely hit 2085 the day before? Like, I want to remind you that 2085 was first hit July 8th, 2025, right? So basically, this was the all-time high like 3 weeks ago, and someone is willing to pay for it now and pay $1.5 billion for it. Now, oftentimes when a stock hits an all-time high, you'll be worried that, oh, is this it? Is that all it can go? They just paid what was the all-time high price 3 weeks ago for what they just paid $1.5 billion. They bought 72 million shares at 2085. That is so good because like think about it, right? Are they going to buy 72 million shares expecting it to go $5 up? No, because they think that's the floor. Like that, they think that's the floor. Just look at this chart. Look at this chart, right? It took all of one day to bounce back. It took all of one day, maybe you could say like a day and a half. It took all of one day to bounce back from the low of, what is this, 2040? That is so bullish because that just screams that this stock is high in demand. It is really, really sought after. Now, what are they going to use it for? A lot of people have been saying they might buy BitGo, which obviously I think that's probably like the highest potential that it would happen, doing something with crypto, especially to facilitate this quick kind of international wire transfer type thing or money transfer type thing that would be over the blockchain. That's just the thing. That's just the type of thing that BitGo does, right? So, and they're already partnering with BitGo, so it'd be a seamless integration with their current products. So I do think that that's the highest potential. Other possible things could be maybe expanding. I mean, like this already helps with the expanding internationally, but like maybe if they want other divisions in like other places, I don't see that because the market in the US is already so big and it's so vast. They have such a big unaddressed TAM right now that just growing in the US would be massive, and just focusing on the US would make more sense in my opinion. So I do think that this probably makes the most sense. But yeah, dude, these earnings were absolutely amazing, and I can't reiterate how bullish this stock momentum is. Like, this is crazy. It bounced back in a day. How often do you see that? That's how high in demand it was, and that's how game-changing this earnings was, because it really did show you that their flywheel is working, right? They're increasing their members, they're increasing their products. Most importantly, they're increasing their products per member, right? They're increasing their credit box, they're expanding their credit range of members of people that they can loan to for their loan platform business. They're getting loaners onto the loan platform business so that they can loan to those members that have slightly lower credit scores. They're starting to not reject and to accept those people that fall they're out of their credit range, to be able to access some of that $100 billion pie that happens annually. And right now, they've only accessed about 3%. They've only accessed about 3%, 3.2% of the overall TAM. And it's only going to get bigger from here. My voice is starting to hurt. Let's go SoFi. See you soon.